It's an honor for me to be here. The only other Bitcoin conference I went to was Bitcoin Policy Institute in Washington, where we had some great speakers, and then we knocked on the doors of Congress people and senators. And boy, talk about it with the need for education. There's a deep need for education in Congress amongst the staff members and everybody else. But again, I just want to level set what is asset management. Every business engages in asset management. The three pillars you're taught in Econ 101, the three pillars of any business is plant, property, equipment, real estate, chairs, computers, human resources or human capital, and capital. That goes with every single business, your business, our business. So that's really asset management. It's to know what the mission is and to work with those three pieces and to achieve the outcome, which is intended for the mission for the company. It's different from investment management. I come from the investment world for many, many years in real estate and private equity. Investment management's different from asset management in that typically investment managers, investment advisors give investment advice, whether it's strategy advice, portfolio construction, the selection of investment asset classes, the selection of individual stocks and bonds. So that's investment advice, but asset managers don't generally give a lot of investment advice. We have two distinguished people here, three, but two of them were keynote speakers. I don't count myself, but I know that Andrew has both an asset management practice and an investment management practice, as well as Adil here has that. I don't know if you're an investment advisor, but anyway. So what we're going to do a little bit differently. I'm going to ask each participant here to go a little bit deeper about who they are, what is their business mission, what you're trying to accomplish, how Bitcoin is employed in their business, whether it's part of your balance sheet or you're working with outside customers with their Bitcoin, and who are your customers. So I'm going to give you, plenty of time here to cover your business, and that way we won't have to come back to that later. So I'd like Adil to start.
Okay, can you hear me? So I'm the Chief Investment Officer of Samara Alpha Management, and our main mission is to make more Bitcoin from Bitcoin. So, all of us have a background in traditional finance. I've been involved in hedge funds and trading strategies for decades. We used to seed a whole bunch of, TradFi hedge funds and trading strategies. And now we try and do that same thing using Bitcoin. Now, Bitcoin is very unique in that it is sort of like property, a currency. It's one of the best pieces of collateral out there. So the way that we go about making more Bitcoin from Bitcoin is, first of all, to keep our entire business denominated in Bitcoin. So we're not running a fund that's a dollar fund and trying to do something in Bitcoin with it. We start out by making it denominated in Bitcoin. So any type of funds coming in are Bitcoin. Redemptions are paid out in Bitcoin. All fees, performance management, whatever happens is calculated and paid in Bitcoin. So what that means is if you have a performance-based compensation based on how much Bitcoin you make, it doesn't really matter if the price of Bitcoin goes to $1 million. That doesn't matter. That price fiat appreciation is all for our clients or whoever else is out there. So we're very pure. If you make more Bitcoin from the Bitcoin, then we keep some of it, you keep some of it. That's the premise. How do we do that? I mean, there's lots of people who try and lever up their Bitcoin to make more Bitcoin. That's not what we do. We try and use Bitcoin as collateral to make other trading strategies possible. So one of the things that people do is, they make markets in Bitcoin futures and options and all what have you, but you don't have to use dollars to collateralize that or to get access to those exchanges. You can take your Bitcoin, post it as margin, You can do whatever trading strategies that you want. When they're profitable, you change the profits into Bitcoin so the Bitcoin grows. So this way, the treasury of our asset management business is Bitcoin. If you don't do anything, we keep up with Bitcoin. So you must have come across a lot of funds, investment products, and things like that who say that they can beat Bitcoin, but it's very hard to beat Bitcoin if you go to dollars. Once you go to dollars, you're not going to be able to keep up with this exponentially growing asset. So we never bother. We just keep it in Bitcoin. And then we do whatever we can to make more Bitcoin, and that grows the pot. So even if the price of Bitcoin goes down or up or sideways or whatever, as long as we make more Bitcoin, we're ahead of the game. So that's part of the puzzle, really. And our clients, you asked about the clients are everybody who needs to make Bitcoin returns on their Bitcoin. And these days, there's more and more of such organizations out there. There are Bitcoin custodians who want to give their depositors a certain amount of return on their Bitcoin. They have to make more Bitcoin to do that. There are Bitcoin-denominated insurance companies, and actually I'll make a little plug for one of the panelists that was supposed to be here was this insurance company, Meanwhile. And I very much encourage you to look at Meanwhile. They do Bitcoin-denominated life insurance policies. So, right, if you bought $1 million life insurance policy right now, what's $1 million worth when you die? A lot less than what 10 Bitcoin will be worth when you die. So it's much better to get a 10 Bitcoin policy. And why am I plugging Meanwhile out here as a Samara Alpha Management? Because Meanwhile gets their float as an insurance company in Bitcoin. They need to put it in something Bitcoin denominated. They're one of our clients, right? So that's part of what our client base is. So I'll stop there and let some of these other people say a word or two.
Yeah, Pierre, take it away. We met at BPI in Washington. He's got the best slide deck for data, statistics, analytics, and he really makes the case of Bitcoin as an investment class, asset class. So thank you so much for your contribution of research to this very robust and creative ecosystem. But take it away. Tell us what you do for a living or what you do for fun.
Sounds good. For fun, I run after my three kids that y'all might have seen today. For a living, so I'm the CEO of the Bitcoin Bond Company, and our mission is really to put a credit wrapper around Bitcoin that is investable by fixed income investors, asset managers, portfolio managers who really they are currently constrained because Bitcoin's a commodity. So spot Bitcoin as a commodity doesn't necessarily fit into every investment mandate. And then there's lots of great equity products out there like MSTR on kind of the levered upside part or STRC on the fixed income side, that these are equity products. And so they just don't fit within the investment mandates of large fixed income funds. And so what they are looking for are notes that have a maturity. And so with that, you have to kind of set aside the common parlance for Bitcoiners of never sell your Bitcoin, right? That we're going to spin up an SPV, going to finance it, it's going to acquire Bitcoin, it's going to be very passive in cold storage, and then after 5 years, we're going to liquidate all the Bitcoin and we're going to pay off the note holders. And so that's something that currently does not exist, so that's what we want to bring into the world. And part of that is making the case for Bitcoin for something that's going to survive the next 5 years, right? So there's kind of qualitative questions around competition from other altcoins or quantum computing, vulnerabilities. That's part of it. And then the other part of it is making the quantitative case for Bitcoin's price performance. Why is it that past returns, we can actually project those out into the future and that we can have some level of confidence about Bitcoin's recovery rate? And I think that this is probably the most important concept in the fixed income world when it pertains to Bitcoin is recovery rate. So when Bitcoin goes down, how often and how quickly does it go back up? Because ultimately that's going to drive a lot of the credit quality metrics over different time horizons for lending against Bitcoin as collateral. So yeah, I'll leave it there. I'll hand it over to Andrew.
Yeah, Andrew, welcome to the panel. Welcome. Your keynote speech was great. Andrew has appeared on CNBC, Squawk Box. So I watched that the other day. It's quite interesting and educational. And Andrew has written articles that have appeared in Institutional Investor, which is a major publication for pension funds, endowments, the whole investment management world. So congratulations. I invite you to look up those the CNBC thing and to read some of those articles in Institutional Investor. But go ahead.
Thank you, Paul. It's great to be here with you, Adel, and it's always nice to be seated next to Pierre. I feel like we're working on many things in common, and I'm very happy to share the stage with you. I already told you a lot about what we're working on, so I'm not going to repeat it, but I guess what I will say, and maybe many people in the room can identify with this, maybe many people watching on the live stream, for me, Bitcoin was a mid-career decision. It's not where I started my career. Where I started my career was in structured finance and structured credit, in many cases working with very large banks for them to optimize their regulatory capital. And with Bitcoin, it was an opportunity to think of a new tool in the area where I was focused. And it's a very dynamic tool. And it takes a lot of courage. It takes a lot of creativity. It takes something of a suspension of disbelief to make a shift in the middle of your career and decide to do something else. And I think that in real time, what we are all observing when we have conversations within our community, because everyone here in this room speaks the same language and has spent countless hours digesting information in different forms to build up the conviction that we all share. When we see others say things that are less well informed about Bitcoin or not informed at all, or revert to the things that are comfortable for them, I think we want to, try to shake them free a little bit. And that's the phase that we're in. And it's an important phase. People don't generally love to discuss inflation either. It's a very uncomfortable, first of all, it's a very cerebral topic. It's very hard to put your finger on it. Most of the authority figures will definitely work to shift the focus of the discussion. The reason that we have inflation is, a bad crop yield or intransigent labor unions or greedy businessmen or, rising oil prices. But none of those is actually the reason that we have inflation. There's only one reason, and that's the quantity of money is increased. And everyone really tries to avoid that discussion. And it's also less comfortable because no one's really well prepared for it. So I guess what I would say to you is that in the context of the professional work that I do, talking to institutional investors about Bitcoin, and probably what Pierre and Adel and Paul are doing as well, and all of you, I think, just try to be sincere, try to be open-minded, try to be understanding, put yourself in the shoes of the person that you're talking to, and remember what your journey was like as you were first onboarding into Bitcoin and the steps that you took and some of the resources that were more helpful for you. And even though I'm saying that to you, it's not easy. That's what, I'm saying it to you as much as I'm saying it aloud so that I myself can hear it and try to take it to heart.
Andrew, one thing you said was that your background was in structured finance. And one thing that I'll tell you a few of the different things we do in the asset management part and investment management part of our Bitcoin denominated stuff that comes from structured finance. And what you'll see here is that all of us have been in the traditional finance world for a long time. And when you take some of those ideas and put them into the Bitcoin world, it's actually quite easy to come up with really interesting products for people. So one of the things we did, we've been running this Bitcoin denominated product for a bunch of years now. And it's pretty good. You know, it makes double-digit returns, Bitcoin, whatever, but it's just one sort of pool of investments. And we thought, well, you know, maybe some people want to take more risk and some people want to take less risk. And that was actually true. So what we did was we tranched it up into a senior piece and a subordinated piece. And the subordinated piece is like equity. It takes most of the risk of the pool of investments, and the senior piece is protected by the equity piece. Now suddenly you have something that instead of, I'm just making up these numbers, instead of making 10% return, it's making like 25% return, Bitcoin and Bitcoin, with a little bit more risk. Then you have a senior piece that is completely protected, right? Where it's not going to lose money until the whole thing goes down like 20%. So who cares about that? It's a whole different client base. It's just like mortgage-backed securities. When they first securitized mortgages, you had 30-year mortgages, and not many people wanted to invest in 30-year securities. So you made like 2-year, 3-year, 5-year, 20-year bonds, and now suddenly there was a big market for it. So what we've done is taken these Bitcoin-denominated investment things and tranched them up. Now we have very safe custodial people who basically don't want to lose their Bitcoin no matter what. And they only want to get a tiny amount of something more than zero for returns. And we can give them that through the senior piece. And to the junior piece, we can give the people like myself who want to take more risk and get a lot more Bitcoin on their Bitcoin, that type of return. So that's one application of like, I guess, financial engineering to the Bitcoin denominated investment part. Another piece is taxes, right? Taxes, I mean, if some of you, I'm sure, bought Bitcoin a long time ago and your basis is low. And if you take that Bitcoin and invest it in a fund, now potentially there's going to be a taxable event. So believe it or not, now there's a bunch of people out there who will lend you Bitcoin using your Bitcoin as collateral. They don't need much of a haircut because it's a pretty risk-free loan from their point. If they give you 10 Bitcoin, they have your 10 Bitcoin as collateral, that's very, very high up in the capital structure. No matter what happens, they can't lose money. So they charge you a tiny, tiny little bit of interest rate. They make money from a pretty much risk-free loan, and you get to invest the Bitcoin in a Bitcoin-denominated product without paying any capital gains on your initial investment. And then when the investment comes to then, you pay it back, you pay the interest rate, and you're done. So there's a lot of traditional tools out there, which, you know, when Bitcoin first started out from 12, 13, 14, 15, the people involved, these were two separate worlds. They weren't together at all, of traditional finance and Bitcoin. And these days, they are together. And more new interesting products are coming online for you guys to invest in.
So I just have one question for each of you. I probably not prepped you for it, but Andrew, in your bio, mentioned Bit bonds, U.S.-backed Bitcoin treasuries. Do you have anything to say about it? How's the traction going? Is the idea getting any traction? Anything to say about that to this audience?
What I would say is to call your senator and your congressman and say that you've heard about the BitBonds proposal and you want to understand their position on the BitBonds proposal, and you hope that it's a positive position. You would not believe how effective it is to make a personal phone call to the office of your legislators. It's very, very effective. And if everyone in this room does that, that would be 50 or 70 calls. That would really move the ball. What I would say, Paul, is that the idea that I put forward has really captured a lot of people's imagination. And I'm very grateful for that. And my idea was to just put it out in the wild and sort of see what people could add to it and improve upon it. And you know, there's a lot of active dialogues that are going on, but even with the state level legislation in Texas and New Hampshire and Arizona that has already been passed for the strategic Bitcoin reserves, Florida just reintroduced, several other states pending. It's not yet. I do not believe that we yet have a leader in the United States. One state. We do have a leader in the form of Cynthia Lummis. She's tremendous. And President Trump has actually shown exceptional leadership on digital assets as well. But we do not have a leader yet among the states that is really digging in on how can Bitcoin improve that state. And I think the states are a laboratory for innovation in our system. It's very rational that a bit bond could get done for the Commonwealth of Pennsylvania or for the, the great state of Denver, Colorado rather, or the municipality of Denver for that matter. So I would say if you could just help to lobby and raise the awareness, that would be the most effective.
This.
Oh, well, you could just Google Bitbonds or have a chat with Grok. I mean, it turns out that Grok is very well informed on this topic, as I've learned. So, that's also incredible. So there's a lot of different ways to find out about it. Yeah.
We'll read it. Pierre, so it appears you've been doing research. You started with Kraken in 2019, and I'm sure at that time you had a vision about the Bitcoin ecosystem. How's your vision changed? And how do you, in your visionary view, how do you see this evolving? We have a lot of future use cases in this audience, and there's going to be a lot more use cases, but can you just share with us your change on vision?
Yeah, sure, absolutely. So when I started really thinking about Bitcoin, it was from a background of a combination of monetary economics and open source software. So I was installing Linux on computers while listening to like Murray Rothbard, podcasts. So when Bitcoin came along, it definitely clicked for me right away. One of the big questions that was always being debated within the Bitcoin community is, how do we get more adoption? Do we go door to door down Main Street and kind of try, I call it the Jack Dorsey approach, right? Of like, let's get the merchant point of sale accepting Bitcoin. And huge congratulations to Square for getting that into their software and accomplishing that. And I'm not opposed to that at all, even though I just don't think it's like the primary adoption driver for Bitcoin. I'm actually very for that. And when I worked at Kraken, it was about integrating the Lightning Network into our ecosystem and delivering Lightning to millions of clients overnight. So I'm very happy with what we accomplished there. But I didn't feel like the payments thesis was really what was going to drive Bitcoin success. And so when I look at monetary economics, how do currencies compete against each other in the international market for money? The Forex markets, right? One of the big ways that you get reflexivity in the Forex markets is what is called speculative attacks. So you will have speculators borrow in a weak currency to sell that weak currency and buy a strong currency, right? So they're basically shorting the currency. And then once that strong currency further appreciates, they're able to pay off that weak currency denominated loan at a profit. And this is reflexive because when they're borrowing, quite often they're actually creating more weak currency, right? And so monetary authorities have three ways of responding to this. The weak currency can raise interest rates, they can impose capital controls, and they can actually have a currency reserve and intervene in the markets. And so, we've seen a glimpse of that in Argentina recently, unfortunately. But I actually think that we can apply this concept to Bitcoin. And I actually think that Bitcoin's success is going to be driven by people's ability to lever up in fiat-denominated terms, in dollar terms, to go buy Bitcoin. And then to have the value of the Bitcoin appreciate, and then either they can refinance their loan or they can pay it off with appreciated Bitcoin or whatever it is. And that this actually is how Bitcoin adoption will go mainstream. And I would argue that this is what we've seen with Strategy. And I think it's going to be a continuing growing trend that we're actually in the very early stages of, right? And of course, there's companies like Unchained that also do Bitcoin collateralized loans. And so this, I think, is a very nascent ecosystem. Bitcoin's a $2.5 trillion asset. And so I think that as the asset base, the collateral base grows, the amount of lending against it will grow. And I also think that as the volatility dampens, there's going to be more willingness to lend against Bitcoin at higher LTVs. And so I think that that's kind of my vision for it right now, is growing in that direction.
Thank you for sharing that. We've run out of time, and there's a wealth of knowledge here. Get together with them, talk one-on-one, three-on-one, whatever. Very, very smart people, very intellectual. For my own commercial, we're one of the sponsors, Pearl Bitcoin Fund. So I do want to talk to wealth managers that are here today to talk about our pathway to tax-free capital gains for long-term investors, anchored on the Opportunity Zone program, which is baked into the tax code. It's been made permanent, so since it is now permanent, it's going to be a key element for wealth estate planning and death estate planning. And I'm also a talking head about opportunity zones nationwide. So if any of you want to pick my brain as to how to take advantage of the Opportunity Zone program, my brain is free. So thank you very much, all of you.